Hi, this is Randy Finney with Right Side of the Chart, and this is a closing market wrap for Tuesday, April 30th, 2019. I wanted to wait till Apple reported today to at least see the initial reaction, but I need to say this. I say this every time we have a major earnings report. I say this every time there's an FOMC announcement, but more so back to the earnings. It's never a good idea to react or do too much on the initial reaction on earnings. So you have the earnings come out, then conference call, and even then, it takes at least overnight and into the morning session for traders to hash things out. And remember, the big boys come out and play when the opening bell starts at 9:30 tomorrow. Yes, Apple's more liquid than a lot of stocks, so institutions can move around a little easier in after hours. But for the most part, it's a lot of retail traders. Typically, they're swinging stocks back and forth in the after hours and pre-market sessions. So again, from experience, I can tell you that I've seen after hour moves go up and backwards and down, positive 5% down. So either way, take it for what it's worth, but I wouldn't, I would take everything with a big grain of salt. And right now, as I'm doing the video, Apple just reported a few minutes ago, and it's looks like it's up about close to 5%. Now, I'm not just that change on the day. Let's see, it's at 209.32 right now, and it closed around right around 200 or so. So again, not a big move, but definitely a positive move so far. And again, how it trades tomorrow into the day, not just at the open, but how it really closes the day tomorrow. Probably be most telling. So let's just wait and see what happens there. Now let's go over the charts. Let's take a look at Apple. We'll start out with QQQ. Today we had a breakdown in QQQ, but there were two reasons that I didn't add this as an official short trade. Members of the site, I've outlined some price targets on Apple, I'm sorry, on the Qs, and some key levels to watch, but just too much of a gamble taking the market in front, long or short, in front of a huge company like Apple. That's most certainly going to probably cause the market to go one way or the other tomorrow. So we did have, finally, for the first time in a while here, we've been watching the trend line off the lows on December 24th, and we had a breakdown. But two things. Number one, it was not impulsive. This isn't a big red impulsive candle like this. This is what you want to see on a breakdown. And nor was it a solid daily close before. And most importantly, even if you had an impulsive candle, you had Apple reporting after the bell. So the technicals can be trumped by earnings and on a market moving stock like Apple. So bottom line is there is a breakdown today. We did close below. So you want to take it on face value. That is bearish. However, as I said before, I was watching not only QQQ but also XLK. Now the big news, and of course the Qs were down, by the way, today, if you're not aware, because of Alphabet's big disappointment last night. Alphabet missed earnings, got the snot knocked out of it today, and they were down. But guess what? It didn't affect XLK, the tech sector. Why? Because Google or Alphabet is no longer considered, at least in the eyes of the S&P 500 in the stock market, it's no longer considered a tech stock. It's now considered a communications company ever since they added the new communications sector, XLC. We'll get to that in a second, but I just want to make clear that, as I said before, until tech breaks, the market's not going to break. And all we had today, we had another intraday little dip below the trend line, but we closed right back on it. You can see the candle there. I've not modified this trend line. It's very clean off the lows on the 24th. So we're still, as far as a sell signal in the market, we still need to see a solid impulsive intraday break and or ideally a daily close below that steep rising wedge and uptrend line here on XLK, the tech sector. So we'll go over this, keep the charts, we'll keep this video relatively brief, but this is where Google or Alphabet resides now in the new XLC communication sector ETF. You see, we don't have a lot of charting history because they just rolled that out last fall, and really they didn't incorporate it, I think, into the S&P until sometime it was on the fourth quarter here, if I'm not mistaken. They introduced the ETF first, and then they did the sector rebalancing for the S&P 500, eliminated the old telecom sector and replaced it with this. So there it is. And so what happened is, you can see here, this sector, and again, one of the bigger weighted sectors in the S&P 500. It's about a 10% weighting. Alphabet's dropped only brought us down to kiss the uptrend line. So there's really, this one's still above trend. And we go back to XLK. Remember, the tech sector is 1/5 of the returns, by far the largest component of the S&P 500. So we still need this guy to break here to give us a fairly high probability sell signal on the market. So back to QQQ. That's where we're at. This is what it looks like, just clean and simple. There's that little doji printed today. So again, let's see how this finishes tomorrow. Apple's up in after hour session, a few percentage points. Nothing big, but certainly not helping this case right now. But again, a lot can happen between right now as I'm doing this video, 4:42 p.m. Eastern time, until the market opens and then closes tomorrow. So let's just keep an eye on that one. And Apple certainly one to watch. As we go through everything else, again, same old on the rest of the indexes that I've covered. The S&P 500 broke down a couple weeks ago and is back tested below, virtually right at basically at the previous 2018 highs, still testing and challenging those highs. I know CNBC cheerleaded a new closing high in the S&P 500, but for all intents and purposes, this is simply a test of the 2018 highs right here. We've been about a week or so, nothing, we haven't popped them. Clearly taken it out. When you see a breakout, it should be impulsive. It should be on high volume, big, and then follow through to the upside. So, it's not bearish or negative or anything like that unless the S&P 500 fails. But the most important point is we had the breakdown over a week ago in the S&P 500 and the Dow and a lot of other things back testing. But again, as I said, those sell signals were not confirmed because the tech sector in QQQ it still remains above trend. For the time being. The one I'm watching, if the markets can power on through these divergences, let's say, let me give you one scenario before I get here. QQQ, let's just say that Apple turns around tomorrow and has a down day or drops within the next week or so, and we do get these sell signals, because a drop in Apple, that's what it would take to knock the tech sector down right now. Well, actually, it wouldn't take a lot since XLK is right on trend. Could take anything. But let's just say we do start to drop and it looks legit, and, shorts pile in, and then suddenly we reverse and we regain those trend lines and we break out to, make a breakout to new highs, not a, 1/10 of 1% close, which we had now, or whatever it was over the 2018 highs, solid breakout. That'd be pretty bullish. And if so, you're probably going to get more bang for your buck on the small caps, because the small caps, IWM, have been really pushing up against this level. I've mentioned this recently here about the lines, I could move the line up a little higher. We'll call it 160, about the 160 level. It is just a big level for the small caps, which have been underperforming. Lots of reactions along that level, and we're pushing up against there. Now, like everything else, as far as the major indexes go, we've got some pretty big divergences right there. You can see we've made a roughly an equal high, a slightly higher high. And even if the small caps pop this soon, it's still going to have this divergence in place. And I'm referring to these divergences down here. They can be extended, meaning we can lift these lines up a little. But no matter what, you have steep divergences. And, again, whether they play out or not, that's what we had right here. We had a divergent high before that drop. We had a divergent high before that sharp correction in early 2018, and we had a divergent high back here in the small caps in 2017. So it's just a heads up, if you will. And what would trigger well, buy signal again would be a pop, but it's, I'm going to tell you the same thing I've been saying with the broad markets right now. It's going to take more than just one impulsive pop or one day move to get me to jump in on the long side right now on the broad markets, because as I mentioned before, any pop to new highs you can see here on the S&P 500 will simply extend the divergences, and it will be a very overbought breakout. And as I said before, breakouts that occur when a stock or the market is very overbought like this, they tend not to go very far. They tend to have a much higher failure rate. So the best case scenario I see for the S&P, whether it pops and makes a convincing breakout or not, would be some consolidation here to work off the overbought conditions, maybe burn through some of these divergences, or at least build up the energy for a more sustained thrust. Otherwise, please don't forget, these are important trend lines in the especially in the NASDAQ 100 here, and we're starting to crack right now. So the potential for a waterfall type sell-off, a very swift and sharp drop, is certainly there. And nothing really has changed on the longer term charts. I'm not going to focus on that today. I have let me find the right board for you here. Let's see, here it is. Here's one of QQQ, a lot of different draws, but a lot of things are still below the trend lines that they broke back in the fourth quarter, and just coming up now and back testing. In fact, let's just look at Apple. Usually I leave the coverage of individual stocks to members of the site, premium content, but this is the market, or at least a big part of it. And so what we're looking at on Apple, you have a long-term trend line, that yellow trend line, that's still intact right here. It's one of several trend lines. You can draw one off the lows as well right here, and that's what the one off the lows would look like. This is really your primary trend line, and it also comes in, let me go back here to a weekly chart. It comes in with those early 2016 lows, and that was a trend line that was broken last quarter, and we're coming up now, we're back testing it. So again, 2016, the beginning of 2016, but more importantly, all the way back to the 2008 lows in Apple. This is your bull market uptrend line, and it's simply being back tested now. Apple's still off the highs. PPO signal line, which is a great trend indicator, when it's below the zero line, that dotted line, the trend is bearish, and it has been since this point. So it's telling you right now it's bearish. It certainly has a potential to get back up there. The indicators are pointing up, but typically you want to pay attention to what this trend is. And back here you had a 32 and 34% drop off that last divergent high, and it told you stay out. The trend is bearish. It told you here the trend was bearish, 45% drop. Other than that, and this is going back a decade, it has said you can be long Apple. The trend is bullish. So just something to note, one of many things. And right now, again, bearish trend. And that zero line often acts as resistance when tested from below. So you have the PPO signal line testing from below. You have the bull market trend line in Apple being tested. So that's where I'm watching. I'm putting a lot of focus on Apple because it is such a market leading and market moving stock. And then from the daily chart, Apple broke down today, but this is far from a sell signal in my book, because as I say, you don't take breakouts the day or just a few days or even a week or so. I'll avoid, usually go out a couple weeks. I won't take a stock before they report, because earnings can trump the charts. More often than not, the next major trend in a stock is indicated by the direction of the charts, if and only if they're clearly bullish or bearish. That's the thing. And a lot of times they aren't. I can look at 100 charts and I'll go through, and maybe only a dozen or so stand out to me as clearly bullish or bearish. The rest are indeterminable. The stock may be in a trend, but in this case, you have a lot like the broad markets here. You have a trend line off the lows on the 24th of December. Well defined, one little whipsaw signal right here, and that's fine. We snapped right back above it. A lot of reactions there. Apple broke down on Thursday. You can see the red candle, but not an impulsive breakdown. We closed almost right back on the trend line, kissed the trend line again from below, but again, and what this is a stock, this is what I talk about. They go into a holding pattern. Who wants to take a big position right before earnings? It's a gamble. It's a crapshoot. Investing and trading always involves some degree of risk, but only a pure gambler is going to sit there and take a big position right before earnings. So point being is just take any breakouts or breakdowns that occur before earnings with a big grain of salt. And where we go from here now, here's the point. Apple is in a precarious position because it has broken down. And so despite what I just said about maybe keeping things light, only take a half position or a small position if you do take a breakdown, you have to respect the charts for what they are. And this is a breakdown. So now tomorrow, if Apple pops, we'll have a candle right here. Apple can go as high, let me make sure I'm on, this is tomorrow's line right here. So Apple can rally as high as about 207.85, we'll call it 208, and simply just backtest that broken trend line from below. And as I'm doing the video now, it's at 211 in the after hours session. So, and again, a lot can happen by tomorrow morning. So what would be bullish? Well, it would be bullish to see Apple open above and remain above that trend line all day tomorrow. That would be another whipsaw signal. And at that point, we'll probably have to do something like this, either move that trend line down there or come in and capture that other one. You see that reaction there, maybe come in like this, and maybe that'll start a new trend line that we can start to test. But as of now, let's just wait and see what happens tomorrow. There's Apple, and now we have we have the FAANG stocks out of the way, so the market's really free to do what it wants. Let's just review that real quick. We had Facebook, who beat earnings, and they gapped up, and they're still above trend. It's kind of a busy chart, but here, let me turn off the annotations and just show you here. So if everything holds up for now, you want to see Facebook remain above here for the bullish case. They may want to come in and backfill this. If something crazy happened tonight, it's hard to imagine. It would take some kind of news event, most likely, because Apple's trading positive right now in the after hour. But if we gap down, and it doesn't have to be tomorrow, it could be anytime within the next week or two here, we have the potential for an island cluster top right now, because that's a cluster of island candles. So if we gap down below that recent low right there, there's a potential. Other than that, there aren't any. Facebook, like I said for a while, is one of the better looking FAANG stocks and has been. But we still have this divergence here, right here. Negative divergence on the PPO continues to build, extremely overbought. We have not been this overbought. You can see the RSI since going back to all the way back in 2017. So other than that, like I say, overbought in itself is not a sell signal. There are no sell signals on this one. So that's Facebook. Amazon was more of a non-event after they reported, and it's just kind of limped along within this right above the trend line. So same story, and the same story I've been talking about for weeks. We need to see the trend lines in QQQ, XLK, and all these FAANG stocks go, or at least the majority of those. So you still have Amazon above trend right now, but precariously above trend. In other words, precarious because it's just one bad day could take it down. But until and unless that happens, there are no sell signals. We could continue to walk up this trend line for days, weeks, or months. So there's Amazon. I already covered Facebook, which is comfortably above trend. Apple, we already covered, which is below trend. Again, as of now, I'm treating this as the primary trend line. So we'll watch this one tomorrow. That's the stock really I'm focused on now. And then Microsoft. Obviously had nice earnings results, gapped up. Again, the potential for an island cluster top, but that's only potential. There's a potential for a lot of things to happen. That doesn't mean it's going to happen, but it is certainly worth watching. So as of now, looks like they've taken out their divergence. So I'm going to give it kudos for Microsoft. We no longer have the divergence, but that's one thing. What we do have are extreme, and I'm talking extreme overbought conditions. 84 on the RSI. That's unusual. Doesn't mean the stock will have to go down, but it's very overbought right now. So like everything else, there's a trend line off the lows from the 24th. So we're not even close to any type of sell signal on Microsoft yet. Down the line, we have Alphabet. That's the one that got knocked down today. You can see a big drop, about 7.5% on earnings, and that took us clearly below. Well, here I have a mess of trend lines here. I'll just show you. This is the trend line right here off the lows on the 24th. That one's been taken out. So now we have Apple and Alphabet. And then sometimes I refer to the FAANG stocks as FAAMG, FAAMGI. Now I don't refer to the FAANGs as FANG. That's years back I coined a term FAAMG FAANG stocks because Facebook, Amazon, Apple, Microsoft, and Google or Alphabet, those are the 5 largest and have been for many years. Netflix was never one of the top components of the NASDAQ 100, so it doesn't have a big weighting. And then it's always been Intel was number 6, so sometimes I call it the FAANG or FAAMG plus I. Now Intel, you can see, like Alphabet, had a big smackdown, earnings-induced smackdown. It took us below this secondary uptrend line and this primary uptrend line off the lows on the 24th. Here, let me get rid of this level here because we already took that out. That was a support level. So what I'm getting at here is if you take the top 6 or so, and I don't know if Cisco has leapfrogged over Intel now in market cap, it might have, or at least in the 6th largest holding, but 2 of the top 6 holdings in the NASDAQ 100 haven't only broken down, they broke down very impulsively with these sharp moves down, and they're below those trend lines. And again, it's the divergence is playing out. So we're not out of the woods yet. Like I said, 2 of the 6 are down. And we'll see what happens, you know, how Apple trades tomorrow, and again how the rest of those trade, because just because they haven't taken out those trend lines, they're still there. The divergences are still in place and some other things. And then finally Cisco. I think Cisco might have leaped over with Intel's drop. It jumped over it in market cap, so it's right up there about the 6th or 7th largest component. They haven't reported yet, but you can see they've already broken trend, and that's again the common theme of this video, that several of the top components of the NASDAQ 100, and many of these are also top components of the S&P 500. They've broken those trend lines and they've started to move lower, and they did so after putting in divergent highs. So that's again developments worth monitoring right now. So we have a few more. It's kind of a mixed signal, or at least you know, several key stocks above trend, and more importantly, if we want to just keep it very simple, not dig down to all those, you have the tech sector above trend, and you have QQQ, which made a slight break today, but depending on what Apple does, this will either remain below trend tomorrow, and what Apple does will also affect what XLK does. So let's just wrap it up here. Let's watch that, and I'll be very clear. If Apple somehow turns around between where it's trading right now, around 211, and then closes the day down or moves down tomorrow big throughout the day, we get a big breakdown here, those are sell signals on the market. And I think they're, if nothing else, they're very attractive sell signals, because you can establish a short position with a stop not far above the recent highs, and if it proves to be a little whipsaw signal, bear trap, fine, because you're not going to ride it out here. You're gonna give back a few percentage points, but the potential, if everything starts to turn over, and I know everything right now, the news is rosy, GDP, all this good stuff, but let me tell you this. The sentiment in the headlines can change on a dime. I've seen it before. You saw it here. You saw it here, heading into the highs. Everything's rosy, and all of a sudden, doom and gloom here. And that's just how it works. The headlines will ebb and flow with the stock market. You know, they'll follow price. Again, right now, you know, fundamentally, yeah, sure, everything earnings season so far has been good, and again, there's not any sell signals. But if we start going down, you'll start to hear all the reasons why the market's dropping after it's already fallen. You know, after it's dropped 3, 5, 10%, wherever we're going. But we'll take it one step at a time, and that's to just watch these key stocks and the tech sector and the Qs, and see how the rest of the week goes. Now that all the FAANG stocks are out of the way, their earnings are out of the way, we can let the market kind of do its thing. All right, so we'll wrap it up here, and if anything big happens tomorrow, I'll do a public video. Otherwise, I'll just continue to do what I've done lately, is keep the general broad market analysis, the public YouTube videos, and those on the right side of the chart. I'll keep those limited to, you know, a few days a week, if unless there's any significant developments to note. As of now, really not much today. Like I said, we're just pretty much closed on trend. This has been Randy Finney with Right Side of the Chart. I hope you enjoyed it.